Welcome back, everyone. We're watching markets set for a rough few weeks ahead with a hawkish Fed, elevated inflation, and the approaching holiday season all driving the markets. One thing to watch, how will the consumer, yes, the ordinary everyday spender, weather inflation? For more, we've got Neil Shah, who is the Edison Group Director of Research. Neil, great to have you here with us this morning. Of course, the Fed, the major catalyst for some of the market moves that we've been tracking over the past several weeks. And now it seems like 75 basis points, that's all but a foregone conclusion, excuse me. And so with all of the other factors that we're going to be monitoring as well, what type of weight do you believe the markets will give to them?
But I think you're right. There is a foregone conclusion. There's expectation that inflation needs to be tackled and that the central banks need to act quickly to address that. I think even if there's a glimmer of hope in the sort of near-term inflation expectations, I think the central banks have got to get ahead of the curve and tame inflation. So I would say that highly unlikely would see anything else but a 75 basis point increase.
It's Julie here, Neil. You say in your notes to us that consumers are going to have to feel the pain here because we've seen this pretty robust consumer spending cycle, even in the face of inflation. It feels like people are starting to feel the pain, right? Particularly over there in the UK with what's going on with energy prices. So how, beyond 75 basis points, whether you're talking about the Fed, the Bank of England, the ECB, how far do you expect central banks to go?
It's a tightrope that they're going to have to walk, and I think they're going to have to monitor data relatively closely. But the last time I was on the show, I said that there's a sort of four-stage process that certainly we're talking about when we're looking at investing in equities. Stage one was the acceptance that we're in a higher inflationary environment. Stage two was the acceptance that you got to adjust your discounting and your valuation views. We're in and stage three is what I was saying that we're going to look at in the current earnings season, which is that earnings expectations have got to come down. Now, in that is the story of the uncertainty that we've got on the horizon about how is the consumer going to fare. A lot of companies that we talk to are nervous about this coming quarter's earnings. I think you're seeing deferrals around decisions. You're seeing spend being sort of pushed out. At some point, I think we're going to get through that. At some point, I think that the comparatives will start to make the sort of pricing data look better. But in real terms, I think there is a real cut to earnings. Real earnings are declining, and that's got to hit spend in some way. So I think we're seeing how far that is to fall. I have to say that it doesn't feel like Armageddon this time, that it's controlled and that we seem to be able to get through it. I think the biggest issue is going to be the skill sets of management teams. There's a lot of management teams who've not been through a proper, an industrial recession or a downturn. And whether they've got the skill sets to manage their companies through that is a big question mark.
And Neil, we've been talking about the R word, the recession word here in the U.S. for a bit, but when you look over at the tightening financial conditions over in Europe, the skyrocketing energy prices, even though they've ameliorated a little bit, especially in Germany, how bad are you concerned that it could get in Europe with respect to a recession there? And then what is the spillover effect into the United States, say?
Well, my view is that the US stands a better chance of weathering the storm compared to Europe. And I think it's a difference in energy security policy. I think Europe's going to be hit harder by that. I also think that in terms of policy decision making, it's very, very variable in Europe. So my feeling is that it's going to be tougher in Europe. And there's a greater concern around uncertainty in Europe. I think the US is better positioned. And, one of the things we're recommending people to do is take a look at European businesses with large US exposures, because actually I think you'll fare better as a result of it. In terms of spillover, clearly there is an impact on any US company that's sort of selling into Europe. But my hope is that that the US surprises on the upside and that they'll be able to sort of weather that.
Neil, it's interesting. You're saying that the consumers, we're expecting to start seeing consumers scale back post-summer, and that's going to start to be noticed by companies. But we've also got data out of MasterCard this morning, their spending pulse, expecting that U.S. retail sales are going to grow 7.1% this holiday season.
Yeah.
I suppose within that, though, of course, is this caveat that you've seen more credit card purchases be taking place. What does that tell you about how the consumer is spending right now and where they're really kind of couching the actual physical cash that's going out the door versus what they're going to increasingly be putting on credit?
Yeah, I mean, look, I think it's, we've had, a couple of decades of, I would say sort of relatively benign conditions for sort of consumers. And that it's one of those things you've got to learn to tighten your belts, if the things that your parents taught you in terms of, be sensible about how you spend, et cetera. And I think there's going to be an adjustment process around that. As I said, I'm not surprised by the data. I mean, my view is that actually the US consumer is in a better shape than I guess the European consumer is. There is just more uncertainty here in Europe, and that's tied to, as I said, the energy security side of things. But for us to get through this at some point, I think that there has got to be a little bit of bite. There's going to be a sort of dip in spending. And that's what's going to lead to a moderation of inflation expectations. Otherwise, it would just continue. So you've got these issues around, rising prices, supply chain issues. And if you've got still robust demand behind it, you'll just see rates push up to counter that.
Neil Shah, Edison Group Director of Research. Thanks for being with us, Neil. Appreciate it.
Pleasure.